Hey guys, Bill Soriano here from Pittsburgh. It's Sunday, February 15th, one day after Valentine's Day, about 11:43 a.m. Eastern Time. I'm in Pittsburgh, PA. If you like my videos, please make sure you hit the subscribe button, hit the like button, comment below. Tell me what you like, tell me what you don't like. If you have questions, put them there, and as long as they're relevant, I'll answer them for you. So the purpose of today's video is this is every weekend now I'm going to do a weekly market recap showing a few of the trades that I took from and some that I was not able to take using trading now using supply and demand trading, right? Supply and demand zones basically for continuation and reversal trading on the 4 hour time frame, right? That's where we're identifying not only the market structure, but we're identifying the supply and demand zones. Okay. So supply and demand zones are basically just order blocks. They're you know, uh, for sell orders, there are supply zones. For buy orders, there are demand zones. So technically, they're just order blocks where we're waiting for price to come back to, right? We're identifying them on the 4 hour time frame. We want to take the trades with the current market structure bias, right? So it can be a continuation trade. It can also be a reversal trade. I'll show you that here in a second. The trades will be taken on the 15-minute time frame. So once price hits that 4 hour supply or demand zone, we're not going to just trade. We're not going to just set our limit orders there, although there could be some instances where we do. That would be if we're trading from a clear extreme supply or demand zone, and we think the price really has no reason to go further above it or further below it. We may set a limit order there, but those trades are always going to have a lower risk to reward ratio because the invalidation zone is going to be larger, and price is going to have to move a lot further to get to our profit targets, right? Our targets. So trades will be taken on the 15-minute. Normally we'll find uh, a refined supply or demand zone on the 15-minute after we get that change of character or lower time frame flip that we're looking for. I'll tell you all about this. Invalidation zones will be at the top of that zone, and the target will be the next higher low. Must have at least a 1 to 2.5 risk to reward ratio to take the trade. Okay, so when I say that we're going to look for, we're going to do continuation and reversal trades, right? So continuation trades are when price is making higher highs, higher lows, higher highs, higher lows, right? You can see how price is moving up here. You're getting a break of structure. You're making higher highs, higher lows, higher highs, higher lows. Uh, you would look to take trades. Of course, we're not going to take trades as structure is broken, right? We want to take trades once price pulls back to these valid demand zones for this bullish continuation, or these valid supply zones for bearish continuation. Okay, but the continuation trades will be all the way up here. Now, when you get to the top here, and then right here, price comes down, right? Fails to make so you got a higher high, you got a higher low. Price then fails to make a higher high, and it moves down, breaks this structure, which we call a change of character or a choke, and it makes a now lower low. Okay, so at this point, now the bias on the market is bearish. However, since you were in a bullish uptrend here, a strong bullish uptrend, before I would want to take a reversal trade, okay, I would probably wait for another pullback, and I would probably wait for this break of structure here. Then I can identify a valid supply zone up here where I could take the trade, and then we would have continuation trades to the downside. Now, there may be some situations here where you get the change of character, and we could identify a trade, a supply zone up here that we could take a sell order from. Okay, just know that there is a chance that this was just a fake out, and instead of now going to the bearish side, price may continue moving upward. Okay, and I kind of show you that here in this example right here, right? How we have this bullish continuation, price comes down, breaks that structure, right? You're making higher highs, higher lows, higher highs, higher lows, higher high, and then you make that lower low that breaks that structure, causing that change of character right there. Okay. see. And so when that happens there, you could then start looking to find a trade here from this demand zone up here. But then what might happen is price may then just move back to the upside, faking you out, and the bullish continuation may continue. So a lot of times here, as you're in this bullish continuation, you're going to look for those bullish trades. Once you get this change of character, if we had a strong bullish trend like we have here, we may wait for that pullback and that break of structure to the downside before looking to take any sell trades, right? So we may just not trade from this area here, okay? Now, on the other hand here, if price is making higher highs, higher lows, higher highs, higher lows, higher highs, and it breaks that structure to that downside, causing that change of character, but then it goes right back to the upside, which is actually another change of character now. Then, since the original price action was bullish, it would be safe for us to look for a demand zone down here to possibly trade from and continue this bullish continuation. You'll get more of that when we're on the charts here, but I just want to kind of show you that this is the basis of the trading plan, is that we're using these supply and demand zones for continuation reversal trading on the 4-hour time frame, right? But the trades will be taking on 15-minute. So to show you what that looks like here, here's a 4-hour demand zone, maybe down in this area here, right? Price has been making, assuming price has been making these higher highs here and higher lows. We have a bullish bias, right, on the 4-hour time frame. And so we try to find a 4-hour demand zone in this area here. And we'll give you the rules for that in a second. Now, if price has a bearish bias, then we look for a 4-hour supply zone to trade from, okay? Now, once these areas are hit, right, you set your alerts right on the beginning of those areas, and once they're hit, then you would drop down to the 15-minute time frame looking for that lower time frame flip, change of character, right? And so what happens here is you could price is coming up on the 15-minute now, right? Okay, price is coming up. It's making those higher highs, higher lows, higher highs, higher lows. It goes into our 4-hour supply zone, comes down. Now, at this point here, we're looking for a change of character right here because this is the lower low. Prior to this high being made, this is the low. So when price moves down to here, right, and then pulls back and then goes lower, this area right here is not the change of character. This area is. Okay, and when that happens, you're now looking to find a refined supply zone on the 15-minute time frame right here. And what this will do is this will give you a better risk to reward ratio on your trade, right? And that's what we're looking for, okay? So that's kind of how you look at that. Now, in the event, let's say the price comes up into the zone, it pulls back. So initially, right, we were looking at this being the change of character down here at this point. The price pulls back and then goes higher. So since it makes a new high, you now have a new swing low where you want to put your line for your break of structure or change of character, and then you look to trade from this refined 15-minute supply zone here. And it would be just the opposite, obviously, for buy trades. You would be trading from demand zones, okay? So that's kind of what it looks like. Now, here's kind of the trading plan is to, like I said, trade with the 4-hour market bias, identify 4-hour valid 4-hour supply or demand zones. When price hits those zones, drop to the 15-minute, wait for lower time frame flip, change of character, then identify refined zone on the 15-minute, and that's where you'll set your limit orders at, right? Now, the rules for these supply and demand zones are you must have a break of structure. You must have caused by an impulse candle. Now, the impulse candle has to lead to a break of structure. It must have imbalance, right? Which we'll be showing you. The area must not be touched after you get the impulse candle. You can't have a wick or something coming back touching that area. So that's mitigation. So it's not mitigated. And then the fourth thing is there, is the liquidity grab. Prior to the impulse candle, you need a liquidity grab. You need to see some kind of liquidity grab. So that's usually just a wick or something going a little bit lower before the impulse up, or going a little bit higher before the impulse down. Okay. And then, of course, remember, obviously, that these zones, right, these supply and demand zones are basically areas where there's been a little consolidation prior to that impulse candle and that break of structure happening, right? So that's kind of what the trading plan is going to be. Okay, so you know, it's important that before you watch my weekly market recap, that you watch this video here, or else you'll have no idea what I'm talking about on the weekly market recap. Okay, so it's important to watch this video. I'm going to try to find a way to play it at the beginning of each video that I make, each weekly market recap. But if I can't do that, I'll just reference that there's a link down in the description area that you need to go to. The other thing is, if you want to learn more about our trading community, the company what we're with, our company has live educators do live training 5 days a week, on different ways to trade. This is more of a smart money strategy, right? Using supply and demand zones or order blocks on the 4-hour time frame. There are educators in our company that do live training on this. We also have a community of over 6,000 people. We have our own trading strategy in that community using our company's impulse scanner. And so if you want to see what our community is about and you want to learn how to trade, then just visit our secret podcast. There's 10 short videos there at SorianaBlueprint.com/secret. Okay. So now what I'm going to do is I'm going to move on to the weekly market recap.